Welcome back to Vetted VA Live. Every Tuesday we get together here, and the primary purpose is really to answer your questions live. So if you've been kind enough to join us, we're going to cover a topic like we do every week. But really, if you have a question, anything mortgage and real estate related, whether it's directly related to VA, using your VA benefit, or anything else mortgage and real estate related, let us know. Throw a question up here in the comments, and we will get to it when we get a natural break in the conversation. But we have a real treat here tonight. We're going to cover VA renovation loans, and we are joined by a realtor and lender expert in the program. They had a recent closing together. So we're going to go through the story of that tonight and how that went, sort of the good, the bad, the ugly, what you need to know. It's an awesome program for those of you who are looking at buying a property that needs some work. Not a lot of loan officers do them, and even less realtors are aware of the program or know how to utilize it. So that's what we're going to talk about tonight. So my two genius experts tonight are Sam Rubin. And Sam, you're in Richardson, Texas. Where's Richardson, Texas?
It's north of Dallas.
I got you. So for all of us non-Texans, it's Dallas. We'll call it Dallas. You're near Dallas. And Joy, you're closer to El Paso?
I am in El Paso, and just for reference, El Paso is 10 hours from Dallas.
That's because Texas is the giant country state that if you've ever driven east to west across it, it will take about forever to cross the state. So 10 hours between the two of you, and you manage to close a renovation loan together. So just to start off with, Joy, why don't you tell us what the heck it is and how it differs from just a regular VA loan and what it can help a buyer do in this market? And realize we'll get to that, but it can be used for refinancing also. But tonight we're going to talk about you guys' experience in closing a purchase transaction and how that went. So why don't you tell us a little bit about the program?
So first of all, newsflash, this was my first VA renovation loan. I wouldn't call myself an expert, but I learned a lot. And the one thing about experts, they know that the more they know that they don't know is the beginning of wisdom, right? And so you learn. So let's be transparent and honest about all that here. The biggest thing, though, is that it is a loan where it allows you to finance renovations into the loan amount. So for our purpose, this loan had a little under $50,000 for the renovation. Now, there was some overage, and we'll talk about that later. Sam is a guru at contracting and figuring out those costs and all that. But for our purpose, the loan amount was about $50,000 over what the home appraised. But given the renovations were going to come in and all of that, they were able to put the appraisal at that new loan amount, so to speak. So bottom line, you can finance repairs and renovations with a VA renovation loan.
Awesome. So a couple things that I want to comment on. You may not consider yourself an expert because you've closed exactly one of these, but I believe that would put you ahead of 99.99% of loan officers who've never been within 1,000 miles of them. When I say that, I include myself. I've been in this for 26 years. I've done a lot of loans. I've done a lot of VA loans. I've never done a VA renovation loan. So we talk a lot on the show about the importance of getting with someone, whether they're in the vetted community or outside of it, that is experienced with the VA program. The VA renovation loan, it's similar, not identical, but similar to the FHA 203K. So hopefully, if you're working with someone, they have experience with the VA loan, they have experience with some type of renovation, whether it's Fannie Mae's home style, whether it's 203K. So it gives you a base of knowledge. And then like Sam and Joy, that they have a desire to learn. Like if you're willing to say, I don't know, I'm going to ask all of the questions and jump in, and you can figure it out like the two of you did here in your first transaction. And now you are experts on the program. So again, kind of just to recap in simple terms, VA loan that allows you to acquire and renovate or refinance and get some money to renovate the property. So why don't, Sam, you tell us a little bit about the property that you guys just came off of, What was the purchase price? We heard it was about $50,000 in renovations. Why don't you tell us just a little bit about the property, the condition it was in when you guys found it for the buyer, and what they did and the condition it ended up in?
So the deal that we just closed, the property was about 2,200 square feet. And at first we thought we just needed to do cosmetic items. However, after doing the inspection, we found out there was complete plumbing repair needed to be done. Electrical work needed to be done, plus some cosmetic. So her rehab consists of a full brand new plumbing, a brand new electrical box, two bathroom remodels, the master and the guest bathroom, and then the kitchen and the pool. Pool has to have some repair as well. So it's a pretty big job. We got multiple quotes for the rehab, and we were able to settle in on a few and get the job done at a little bit under $50K.
Perfect. So how do you feel the property that they ended up with when they were done compared to a turnkey home they could have got that maybe didn't need the renovation loan, both in terms of price and then the end product that family gets to live in?
So this particular buyer was very adamant about this house. She looked at over 200 homes that was on the market at the time, and the house has the equity. When we contracted on it, I ran the numbers. Its value was there. So we initially got some closing cost assistance at that time, and figured out the renovations that was needed. We got an additional 20 grand to help us. It basically covered all closing costs and fees. So she didn't have to come to the table with anything. But the house had the equity. So technically, the appraiser that appraised the home, for some reason, he appraised it right at the value of the sales price plus the repairs, which whatever it met value. However, based off of and it still has about a good $20,000 to $25,000 worth of equity, that if another appraiser that knows what they're doing when it comes to ARVs were to appraise it, she will have that value.
Well, let's talk about that, because it's an important concept when we're talking about renovation loans. And for most home buyers of any stripe, it really is something that doesn't come up. ARV stands for after repaired value. So the renovation is important here. You should be getting a discount for the property if you're buying something that needs renovation for your effort, time, energy of doing all that. So how did that work in this transaction, Joy? You guys ordered the appraisal through a VA panel appraiser like you're required to, and then had they done a renovation appraisal before? And were they familiar with taking into account your scope of work? And were they well-versed in arriving at an after repaired value of what the home would be worth after all those renovations were done?
Great question. So our first learning lesson of a VA Reno loan was we should have the bid before we order the appraisal. So we did not order the appraisal in the correct order. Now, however, here was the fun part. Our appraiser had never done one of these. He was about 80 years old. He didn't use email. And so, when we figured out, hey, that was not the order in which we should have done it, we got the bid, and there had to be some corrections on the bid anyway, of things that we could cover, because there were more damages like the plumbing, the electrical. Well, of course, if you have that, you're going to have to cut something else out. So even if we would have turned in the first bid, it wouldn't have been correct. We would have had to turn in another one. So it worked out, right? We learned, but it kind of worked out. But the problem was the gentleman didn't understand that these repairs and this renovation would take place after the loan has closed. And so he kind of got confused. because we were like, well, hey, this will be covered in the renovation. So he kept putting subject to, and in your appraisal, you either have as is, meaning the appraisal's fine, everything's good to go, here you go, for your turnkey homes, or you have subject to the following repairs. And in a VA renovation appraisal, you will have subject to, and it'll basically say seed bid, or it'll list all the things that are going to get changed, corrected, updated, all of that. And so that is how, at the end, after the renovations are done, that's how they mark your appraisal as final. Bottom line, though, is we had an appraiser who was not familiar with it. This was our first loan, so we had some learning things. But at the end of the day, it was kind of difficult because he wouldn't use his email. We kept calling him and saying, hey, okay, here's the bid. These are going to be done after this loan closes. And we had to have several conversations with that. And I think the regional loan center, he called them as well and got involved, and the lender might have called him as well. It was very interesting working with someone who had never done it. And this guy had been doing appraisals for 50 years. So even some appraisers aren't familiar with a VA renovation loan. So you just need a very understanding team, a very understanding contractor. It takes everyone kind of working together on this, because you have to have the bid, right, to order the appraisal. That means the contractor, you need to get your contractors out there. You need to get some estimates. You need, Sam has her contracting license and general contracting license. And so she was able to be the contractor on this. So guys, that is invaluable. Whoever you use as a general contractor, invaluable. Like, they have to work with you.
I thought you were going to recommend that they find a realtor who can also be their general contractor, which would be similar to saying, go find a purple unicorn with diamond encrusted hooves to
Pretty
represent you. Because I don't believe there's a lot of them. I actually know one here in Southern California, but they are few and far between. So don't expect that you're going to be fortunate enough. So we're going to bounce around a little bit. I am going to do my best to keep us on track, because there's a million things and I want to kind of keep it in a linear fashion. But we do have our first question here. This is a good one. I think, Sam, you can answer this for us. Did a general home inspection catch all of the items, such as the electrical and the plumbing and the pool, or did the buyers have to get additional inspections on top of the upfront general home inspection that you guys had done?
That is a great question. Anytime, as a builder slash contractor myself, anytime I go into a house to do additional inspections, because you want to make sure that everything that you're renovating is factored into the budget, so you're not losing out on money once the time comes for you to do the rehab. But no, so general inspection did not catch the plumbing issues. The electrical, it did, because it's an older home. So in Texas now, when the house is of a certain age, they were built, the electrical closet into outside of a closet into another area, just flipping it to the outside of the house, because where it's located in the closet, there's a wall to the outside, which assisted us with getting us a lower budget. The plumbing we hired. So this is another issue that we have in Texas. Depending on the age of the home, there didn't used to be 2 cleanouts with properties. Some homes only have 1 cleanout, which is the way that the plumber accesses the property to see where the water flows, if there's any cuts in the lines and stuff like that. So we hired 3 different plumbers to figure this out, right? 2 the buyer found, and the last one being one of my contractors. The 2 and they did a camera. They snaked it with the camera and found that all the plumbing was ridiculous, even though the seller provided us with a document from a plumbing company, one of which we had go out there, who couldn't find the secondary, which it didn't have one. But a year ago, they claimed that plumbing was fine. But as of the date of us contracting and inspecting, plumbing is completely rotted and understand that either. But you definitely, if you're going to get into something like this, want to have the specific people in charge of those items come out and view it, because the general home inspection will not find the issues that we found. And they are not allowed to do some things as a general home inspector because their license doesn't allow them to do that. They can't go in and remove electrical panels and do all different types of testing. When it comes to HVACs, they can only test the air and stuff. And in plumbing, many of them are not going to don't have cameras and do sewer line checks. So definitely get separate inspections in a situation like this.
So let me ask you a question on this. I know at a certain threshold, and I believe, you guys correct me if I'm wrong, hopefully at $50,000 or more, is that the threshold when we have to get a HUD inspector involved, and the work that your contractor, you as a general contractor, are directing? You're not doing it all, but you're managing all of the subs. Tell us what the HUD inspector is and what their role is in this process and what they did for you guys on this project.
So we kept the budget under 50K to not have to involve a HUD consultant. We did have a couple other people give bids, not just myself. Some people might see it as a conflict of interest, and if you're dealing with my integrity comes before anything and my clients come first, I'm saving her well over 30 grand with her using my subcontractors because I do so much work with them. So that's one of the reasons why she decided to move forward with us as a general contracting to do the work. But had she not, she would have been involving a HUD consultant and not qualified for the property because we maxed her out on her approval letter once we added the rehab budget. Now, I know y'all say you maxed her out. Yes, but her payments are still within the budget that she requested for a home. So she was looking at 415, I think 400,000 or something like that. We ended up at 380. So, so if we had to have involved a HUD consultant, it would have gotten a little bit more in depth. But we kept it under that 50 to not have to involve one.
If you had gone over it, what is the role of that HUD consultant? What do they do? What are they adding to the process? And why do the lenders feel like that's beneficial or should be required with sort of higher amounts of rehab?
Joy, take that question.
So bottom line, here's what I know, y'all, because I'm not claiming to be an expert, but I've done more than you said 99% of other loan officers. So once a HUD consultant is involved, they get paid for their time, the fees go up, and then there are inspections that have to happen. And here's the issue with that. I know in El Paso, we didn't even have a certified HUD person. We didn't even have one. So we had, we just got one. He got certified this year because he's one of the home inspectors that I know personally. But before that, we didn't have anyone. So if you did a rehab loan, FHA, or a VA Reno loan, and you went above that 50,000, you had to bring someone in from another city to come and inspect the renovations as they go along, and basically phase inspections. It costs extra money, and obviously it can have delays with it because you're on their schedule. You can't do X before you do, or you can't do Z before you do X and Y, right? So the phase inspections, that's what I know. And so they were like, if we cannot have, it above 50,000, and of course we were right on budget and we couldn't go over anyway. So it kind of saved us there too. But that is what the HUD counselor and all that was going to entail if we had to go that route.
And from the lender's perspective, the purpose of that is when you get to higher amounts of work, they want to make sure you don't get a shoddy contractor. In this situation, you guys had the best contractor in all of Texas. But if you get a shoddy contractor, no one's checking their work, and you get $60,000, $70,000, $80,000 into a rehab, you can owe more than the home is worth and still need double the work done because your contractor's falling apart. If you're doing $20,000 of rehab, there's a risk there, but the risk is smaller. So when you get to the higher dollar amounts, the lender is looking out for their interests as the property is the security for the loan, but they're looking out for your interest also. They want a good outcome and a good result for everyone. So it's awesome that they were able to avoid it in this situation, but I wouldn't necessarily look at it as a bad thing. It isn't a cost and it can stretch out the timeline of everything, but it is an important protection for you just to make sure that your contractor is doing what they should. It's another person looking over their shoulder, inspecting and making sure that you stay on track. So Joy, with this kind of where we are in this conversation, what I would like to go over. So we talked about the appraisal, we talked about the bid, we talked about the dollar amount of work that was done. How do we calculate the loan amount? What is the borrower borrowing? You have a purchase price, you got work that needs to be done, we have a contingency. How do you as the loan officer go about determining the loan amount and qualifying the borrower for the loan?
So it's the loan or the purchase price of the home, right? Plus the renovation budget, and then 10% of the overage. And that's like a contingency, because any good contractor knows that things don't always go on budget. I mean, even we know, right? Like how many of you have started a DIY? Don't raise your hand. Well, you can raise your hand because you're not, I can't see anyone. Josh, have you ever started a DIY and it got out of control?
So you're asking the least handy person on the history of the planet. So I only do demolition because I can do really good demolition, but actually putting things back together, I must have a plan for handy people to actually help me with that. So unfortunately, since I'm incapable of doing anything, I have never abandoned a DIY project.
Yeah. Okay. I'm glad you've never done that. Because at the end of the day, normally it ends up costing you more time and money. But general contractors, good general contractors, they understand that there's the inevitable that goes over cost and all of that. So there's a 10% contingency in there. So in this instance, though, we had $20,000 to work with from the seller. It's huge, because her closing costs, normally we say 2 to 3% of the loan amount in closing costs. This is closer to 4 or 5% in closing costs, truthfully. It's a more expensive loan. You're going to take about 0.25% hit on the rate sometimes, depending upon the lender credit score and all that. So
hold on. I want you to go even slower through that. I want everyone to know, because we're talking about all the good things, this awesome program, this wonderful thing that you guys did, but there are some downsides to it. So compare and contrast, and just like you just did, I want everyone to pay attention. You're talking about the cost of this loan relative to a standard VA loan. And remember, she's talking about Texas. Every state varies. There's higher and lower cost states, but Texas is fairly standard for most of the country. So how do your closing costs look on this renovation loan versus a standard VA purchase?
So we're looking at 4 to 5% in closing costs. And this is round, because it could be more or less. There are certain factors. We don't know credit scores. Your interest rate could be need to be bought down to make you qualify, all kinds of different factors, but it is higher than your normal standard VA loan. The closing costs are higher, and there's a reason. You have those inspections, you have a contingency that you have to put into place of 10% of the rental budget. So those alone, if you go above 50,000, you're going to have to pay for those face inspections from the HUD counselor, the HUD consultant. So you have to build this in. Now, Sam was able to negotiate $20,000 in seller concessions for this. That's the beauty of this. You're looking at homes maybe that have sat on the market. People don't have the money to renovate them. They're not cheap enough for an investor, right? They're not cheap enough for an investor to go buy, but they need some love. And so that's the beauty of this. If you can go in, wheel and deal and get some seller concessions to help with that, that's one way. And then also you're going to take a hit on the interest rate. These are just bottom line. It's a riskier loan. You're going to have this home renovated. You have to wait to move in, more than likely. So it's a riskier loan. Now, is it risky? No, because you still have to go through credit writing and all that, but there's a potential for things to, change a little bit. And so for the level of risk that a lender is willing to take, they're going to give you a higher interest rate for it.
So Sam, why don't we circle back with you from the realtor side? You're the one that's familiar with market values, what the buyers could have got if they had gone and bought a turnkey home. We talked about this a little bit, but in light of having a couple percent more in closing costs, slightly higher interest rate, how did your buyer come out on this versus, again, going out and buying a turnkey property?
So she basically is walking in with equity. She has, even though we have the deal at 3D, there is it's more than likely the true appraisal value is about 415. Just based off of a comp that was basically spot on for her property. She has equity. She gets to make the house, was allowing her to do that, and and the area that she's buying in, the value there is steadily increasing, as well as the house next door just went up for sale. They just rehabbed it, and it's now up for sale. So she definitely benefits overall in this situation.
Perfect. So Joy, why don't you kind of come back and circle back in terms of, so you end up at closing a slightly higher interest rate. One of the big benefits of the VA loan further down the line is being able to do a VA IRRRL. Now that all the renovations are done and they've moved in, how does that process work for her? When is she eligible and what does that look like?
210 days and 6 payments. Right? That's the answer. It's the same, once you have the loan, it's like a standard VA loan, right? So that's the answer. The only difference in here really is you can finance the renovations in the home in the total loan amount. So yeah.
Okay, so we've talked about really the specifics of you guys' situation here. If someone's watching in the audience, they're saying, "Hey, that sounds awesome. I only want to do $10,000 of upgrades, or I want to do $95,000 of upgrades." What are the limits? Is there a limit, a minimum of work that needs to be done, and is there a maximum of work that you can do to the property?
So I want Sam to touch on the after repair value, because ultimately, like, the biggest issue will be it appraising, right? Well, that's one issue. And then the second issue is qualifying. But Sam, like, how did you get the after repair value on the home that just closed? Because your expertise made that go. How did you know, like, what to do to get the value so we could actually finance the renovations?
In regards to your question, Josh, about the minimum and maximum renovation loan, if you have $5,000 to $20,000 in repairs, it wouldn't make sense. Go out and get a small loan from somewhere, or spend your check once a month or whatever fixing up a certain item, because it just doesn't make sense. Like, you're adding $20,000 into the property, getting a higher interest rate, and you can do that over time if it's not going to be something right away. But I don't think there is too small of a minimum. I don't know about the minimum, but I do know that they can go well over 200,000 in renovations, just based off of one of the lenders that offer the program. So we do know that you can go well over 200,000 in renovations. The minimum, if it's under 20 value, your realtor would need to run the comps, which is the comparables, and look at the properties that have sold in the neighborhood that have been updated to similar of what you're going to do to the property. And those are the ones that they want to use to give you the value that could be there. If the value is not there, it's not going to work as a renovation loan, because it's not going to appraise. So let's say, for instance, we got the property we contracted this one at 330, but it appraised at 334. So let's just say that the house value, even in and after repair value, was 350,000, but yet you got 50,000 plus of work. It's not going to work. No matter how hard you try to save funds, wherever the case may be, just won't work because the appraisal, the after repair value, which is the appraisal value of what you do to the property to make it prettier, is just not there. So the numbers definitely have to make sense. If the realtor can't find the comps, and I will say this, with me investing over the last 5+ years, I have set the comps for certain neighborhoods. So let's just say, not only with rehab but new construction. So let's just say that you find a house and it's just a gym, and no out of the neighborhood because they just love it. So nothing's been renovated and you're the first to do it. They have the opportunity to go outside the area and check for comps that meet the same. It does not have to be directly in the subdivision or surrounding. You can go out in some cases 1, 2, 3, 4, 5 miles, if that particular subdivision does not have the immediate comps that you need to make it work. If all else fails, get a pay that 600 to $800 or whatever it is in your state to get an appraisal as an ARV, and then work it backwards that way.
So one of the things I think is important for you guys listening, loan officers like myself, like Joy, we always hear from our borrowers that already own. When it's refinance season, they say, we ask, well, how much do you think your home is worth? And I said, well, my realtor says we could get X for it. Well, your realtor very well could be right, but oftentimes what it will appraise for is different. And the reason being is, what are those comps that support it? So what you're saying here is it is really important that it's not just, hey, you fix this property up like this, I know I could get you $425,000. We need to know that when it's fixed, that there's already closed sales that would support that. So when the appraiser comes in, we're not saying, no, take my word for it, I could get 425 when the work is done. We have to be able to show, here are the houses that prove you will get 425 when it's done. So if you're looking at this program and you're in a more rural area, there's not as many homes, not as many comps. You're looking to do some amazing improvements. You're saying, I'm going to make the coolest house ever within 20 miles. We probably don't have comps within 20 miles to support it. So it's another thing there to be careful with. And just want to kind of circle back and reiterate, Sam, what you said is really, really important. The program has no limit on minimum repairs, but what Joy was saying, the costs just don't justify it. You're going to have to get well above $20,000 of repairs before this would make sense from a financial perspective. So I want to jump in here. We have a couple of really good questions here, and reiterate, if you are watching at home and you have a question, jump in here, throw the question in the comments. We'll definitely get to it. Keep coughing here on you guys. The first question here is, who are the best lenders for this loan? The vast majority of VA lenders don't do VA renovation loans. So who is doing them? And is there any reason to think that one is any better than the others, or any differences between them?
So I use, can we say mortgage companies, or what do we do?
I don't see why not. We don't have a hole on this one. It's not like there's a ton of lenders out there doing them.
No. So I used Equity Prime Mortgage, and the reason I did is because, truthfully, I had a great relationship with the staff there and the renovation department, and Sam can tell you that we were on them constantly, and it's hard because there's certain documents that have to be signed by the builder or the general contractor or whatever, and so who I can communicate with and they communicate back with me is really important. So I used Equity Prime Mortgage. That is truthfully the only one. I have really tried to study and know that product well from that lender. But honestly, loan officers who are in the VA space, they may have access to, multiple lenders. Just a lot of people during COVID stopped that program and they haven't brought it back. So there's very few. I mean, Josh may have one. I know Equity Prime. I think there might be one other one. Do you have another one, Josh?
Well, it was AFR, but AFR never got back into it, right?
Right. So AFR didn't do. So there's not many, and I don't know any direct banks or anything like that who are doing them. So and I will tell you that off of Equity Prime's guidelines, the max renovation for them is $100,000. That's not a VA guideline. That is an equity prime mortgage overlay. So if you're hearing this and you see this house down the road and a real estate agent told you with XYZ renovations at 150K, it would be worth X amount of dollars, you can't get more than 100,000. And guys, remember that you have to qualify based on the renovation budget plus the loan. So our borrower had to qualify at $380,000. And you need to remember, because maybe it's just out of your budget to get that $50,000 or $75,000 renovation portion. But again, and this is the beauty of this, Sam being the amazing agent that she is, she knew what to renovate to get the value. She had studied the comps to get the value. And she knew, what would get the value and what wouldn't. It may be incredible to put a sunroom on the back of your home, but that may not get you the value that you need to do this product. And so it really takes a very knowledgeable agent of the local area and also the ARV of things that have been updated to see on that, because maybe what you want to do isn't what's going to close your loan. And if you don't close the loan, you don't get to renovate.
Perfect. We've got another question here. This is a good one. Intuitively, you might think these are similar, but is the repair work financed under warranty similar to a builder's 1-year warranty on new construction? So with this program, Sam, you hire a contractor to do these upgrades for you. Is there any warranty on the work as if you had gone and bought a new home from KB Homes or another national builder?
Yes, and I'm sorry. Yes, you will receive. So anytime you're dealing with a contractor, it doesn't matter who, they need to be providing at a minimum 1 year of workmanship after the work is completed. If they do not, don't use them. What they get paid and et cetera, will involve some sort of warranty agreement document that they're going to send you saying, hey, this work is warranted up until XYZ. But it's not going to be like 5 to 10 years, because when you're rehabbing, it's going to be for a max 1 year. With new construction, those warranties differ because of the new construction. But with rehabs, your warranties are typically for 1 year from the time of completion.
Perfect. So we've talked,
and you can still get a
Go ahead, Sam.
You can still get a general home warranty with whatever company you choose to after the fact, and it will be in addition to the 1 year warranty that you get from the contractor.
And it's probably always a good idea to do that, regardless, new, used. I mean, some people look at it, especially when prices were getting pushed, saying it might be an area to save when sellers weren't willing to pay for it. It's always a good idea. There are deductibles. It's like any other type of insurance. It's not fantastic, but we've all had clients move in and an AC goes out the first weekend they move in, and it's $3,000, $4,000 repair right there. So it's a little bit of peace of mind after you've paid out a bunch of money to close your home. What I was going to say is we've talked about all the awesome things, or a lot of the awesome things about this program. I want to talk about, besides higher closing costs, slightly higher interest rate, are there any downsides to this program? Does it get more restrictive on qualifying ratios? Are we still using an automated underwrite? How does it vary from an underwriting perspective and a qualifying perspective relative to a standard VA loan?
So I'm pulling out EPM's guidelines right now. That's what we call equity prime mortgage. Here's the deal. You cannot have below a 580 credit score.
Which is actually, I mean, VA doesn't have that minimum, but a 580 credit score, like, I'm not sure that we should be putting people with a sub 600, a sub 620 score into a loan here. That's a little bit more complex, requires reserves. I mean, there's always reasons. And I've seen people with a 580 credit score that were previously 800 borrowers and got back to 800. Things happen, but this is a slightly riskier loan, both to you and to the lender. So it makes sense to me that, I mean, to me, 580 is pretty aggressive for a program like this, right?
Yeah. But also, I had a client who was under contract for a new build, 690. credit score, right? And it ended up being a manual underwrite just because of lack of history. And so, there's reasons why things are manual underwrites sometimes and all of that. But for this particular loan program, they will do manual underwrites, but you're not going to have a credit score below 580. And then if it ends up being a manual underwrite, your debt to income ratio cannot be higher than 45%. Now, we know that VA loans go by residual income. Your income that you have left over after your shelter costs, your mortgage, childcare costs, any debt obligations monthly, not your cell phone bill and stuff like that. So, but all of that can't be more than 45% if you are a manual underwrite under this program. Okay. It doesn't matter if your credit score is a 680 and you're a manual underwrite, you can't have higher than 45% debt to income ratio. And again, this is Equity Prime Mortgages standards, not VA guidelines. Okay.
If I'm hearing you right, though, automated underwriting is an option. So you're saying they will do a manual downgrade, but if you can get an automated, it can still go through the automated system.
Yeah. So, on that regard, we've seen loans upwards of 70 to 80, percent debt to income ratio with an automated underwriting, accept eligible or whatever. Here's the other thing that the issues with this too is, some veterans are purchasing mixed use properties. And as far as Equity Prime goes, you can't do a VA Reno loan with a mixed use property. So you couldn't have, the VA will let you purchase a mixed use property as long as part of it is used for living, right? It has to be primary home. Well, you can't go in and do a renovation on a mixed use property. They won't allow a VA Reno for that.
And by mixed use, you're meaning there's a partial commercial use of that property, not multiple units, because 2, 3, 4 units they will do. Is that correct?
Yes, but there's stipulations on the units as well. So on 1 to 2 units, if you have a 580 credit score, your loan to value can't be more than 90%. So that cuts into your budget. That really cuts into your budget. Now, if you have a 600 credit score, you can do 1 and 2 units with a VA Reno. 1 to 2 units, 600 and above. And then if you want to get up to that 3 and 4 unit, you need to have a 680 and above to get 100% financing for it.
Perfect. So we've covered a lot of ground. How about in terms of the renovations that are eligible? Are there any types of renovations that you cannot do to your property with this loan?
Yeah. Sorry, y'all. You can't put in a pool. You can renovate a pool.
Because that's what I was going to say when you guys were saying, hey, we did a bunch of repairs to the pool. I'm thinking, well, that must not fall under the guidelines of not being able to put in a pool. So you're able to renovate. You got a pool with problems, pool with issues. You can fix it, but you can't put a new pool in.
Yeah. And you can't go get a hot tub. I mean, I'm thinking of the things that I would want to do that I wouldn't be able to do with this loan, right? So you can't do structural modifications. So let's say you want to make it a 2-story instead of a 1-story. You can't structurally change the integrity of the home. Landscaping, you can't do landscaping. You can't do like site improvements in the backyard. You can't put in a tennis court. You can't, and it states right here, you can't do any repair that is considered self-help. Like you can't do your own repairs, right? It all has to be done by the general contractor. And I know Sam covered this, but remember that your contractor has to be signed up with a VA. It has to be a VA builder. It has to have a VA builder ID. Remember that. That's important because the VA builders certify with a 1-year warranty, and they have a little number, and that has to go on your loan as well because they're going to be responsible for the work that they do. So I'm trying to look through here. You can't put a bathhouse. Can't put a barbecue pit.
They're just joy killers, as far as I can tell. This is just joy killers, all the fun stuff.
Satellite dishes, photo murals. Why are all these things in here? Because someone has tried to do it.
I didn't know anyone still wanted satellite dishes. I thought everything was streaming. We didn't need giant dishes on the top of our house anymore. Going back to the contractor being registered with the VA, Sam, what does that process look like? Let's say that my buddy is the greatest contractor in the history of the world, and he's going to give me a smoking deal, and I want to make sure I use him. How do we get them added to the VA panel where we can utilize their services?
So, okay, y'all are going to be shocked, right? So, the VA does not care if the person has done any work. That's just true, right? There's like 4 or 5 documents that the VA requires you to fill out. Yeah, I know, Joy. Crazy, right? So there's like 4 or 5 documents that the VA wants you to fill out in order to get the builder ID number issued. However, after that's issued, the lenders that you partner with on this for the VA rental and or building a house, the builder and or the general contractor slash builder has to have experience. You cannot just go in saying, hey, I want to build my friend house and think you're about to get an approval through these lenders. They want to have references. They will check your credit. Some of them will. I've had a couple not have to check our credit, but EPM check the credit with a soft pull. So the builder and or contractor will want to know that that's probably going to be needed. And if it is, are they going to be willing to allow the credit pool? So that's one thing. There's insurance requirements that the VA requires, as well as the lender, typically at a minimum 1 million, general liability, builder's risk for builders. But they definitely check your references. They want to know how many you've done in the last year. Have you ever done a project of this size? So just because your friend is a builder contractor and you want to give them, the opportunity does not mean that the lender is going to qualify them. The VA, simple, easy documents. If you have a friend that need to get it, just reach out to any of us. We can help them get their builder ID. But the lender themselves will have their specific requirements before they let a general contractor touch that property.
So, Sam, the VA does have a requirement that I already confessed to Joy earlier that I'm the least handy man on the planet. So I can't do anything. But if I were the most handy man and I do the most beautiful work and I would not trust anyone to do the renovations on my home, I am not a licensed contractor. I am the veteran home buyer and I want to do all the work myself. Am I allowed to do that?
Based off of what we've gathered, the lenders are not okay. So I believe in the guidelines somewhere says the buyer as a veteran can do the work. I would have to find it. So don't quote me on this, you guys, but I remember reading it somewhere. However, none of these lenders are going to let you touch your property. That's just facts. Most of them that we've been dealing with, one of which I'm dealing with a new construction right now. The buyer has had experience with me over the last 2 years, and we were going to see if they would allow her to just, and it was a no. So need to check the guidelines in regards to the VA guidelines allowing it. But as far as these lenders, they're not allowing it based off of current experience.
And really, again, that's just out of an abundance of caution, right? Protect the lender, protect the home owner who may think they're the greatest handyman on the planet, but they may be like me and actually not know how to do anything and would go in and destroy that properties. We actually have another question here. And so you may have already said this, but will your realtor or lender help with finding the contractor? I've had the worst luck with contractors. So Sam, imagine you don't have a contracting background. Joy, imagine you don't have Sam on the transaction. Would either of you be able to help your client in locating and hiring contractors?
I'm not doing that. And here's why. Here's why. Hey, Mr. Contractor, come on and help me, blah, blah, blah. You have a bad experience. You're going to come back and get upset with me. And the truth is, if I recommend someone, I hope and pray that they do the right thing. But I mean, I'm just being real with y'all. I don't deal with a lot of contractors because I'm a loan officer. I've never built my own home. I'm the least handy person. I have no people, for smaller things, but I have never built a home. I do not have the experience that Sam has had in the past. So I would never feel comfortable suggesting anyone. I would say, hey, trust but verify. I want, start calling, truthfully, I would tell them, go talk to your real estate agent because they may have people you can interview, but I would talk to at least three contractors and who have had experience doing this, and they need to have a VA builder ID. The answer is no. Truthfully, I don't feel comfortable doing it.
And before Sam chimes in, because she may have a different answer than you or I do, but as a loan officer, we already have enough liability on the financial side. I will be responsible for your numbers and your qualifying and all that fun stuff. I would love to help you with a contractor. I've personally flipped over 40 homes, hiring contractors since I cannot do any of the work myself. Everyone has bad luck with contractors. I've had bad experience with contractors with having done that many renovations. There's just too much liability. We would absolutely love to help you. But I want to make sure that you and I as a borrower and lender have a great relationship for the next 15, 20 years and not have it go sideways over a contractor that had done a great job for me, not delivering in the same way for you, or just making a mistake and screwing something up unnecessarily. So Sam, are you with us, or are you on a different mind?
Well, I'm on a different mind only because as a realtor in DFW, and with my background and what I do, I tend to investors and my clients that, I have the experience and I have the contractors to back it up. Not every realtor does. I have realtors reach out to me almost every day asking for something because they don't have access to it. Now, I do back up what you said with somebody might do a great job for you and not do it for the next person because we have experienced that. But with that, there's no guarantee with anybody, right? Like there's no guarantee that the person who did XYZ job on this house for me is going to do the same on the next job, because he might be hiring subcontractors that he picked up from Home Depot, which they do. And that person said that they know how to do XYZ, and then the job turns out to not be what it was stated. So it is hard finding contractors out here. Even as a builder or contractor, we have issues with contractors. We have to hire and fire people on a regular basis. So it's not just you guys out here struggling. We have those issues, but when we get a good contractor, we lock them in and we try to keep them busy to be able to provide the work up to a certain standard, right? And that's probably a reason why you're having issues. Don't get it from a reputable person that has the business. That happens. But we do offer, some realtors do offer references. When we went through the thing, I said, hey, you call your people, I'm gonna call my people. We'll put the numbers together and go from there. I didn't say, hey, use my person and use this. Like, I didn't do that. We did the background, we did the research, we got the invoices, we got the bids, and overall at the end, because of my people and who working with me, she got a better deal using us than she did with the other folk.
Perfect. So we like to keep these near an hour. We're at about 54, 55 minutes right now. I do have a couple more questions for you ladies that I want you to clarify for me. And I want to give you guys an opportunity to kind of close with any additional information you think that buyers, borrowers should know and be aware of. So next one for me would be timelines. Obviously, the VA loan is an owner-occupied loan. These people are buying the property, renovating it to move in and live in. So they would like to have it done in a week. Is there a maximum timeline for the volume of work? How long can this scope of work take?
The renovations have to be done, and you need to move in within a year. That's the max, though. So that's what the guideline says for equity prime mortgage. So the max is 12 months for the renovations.
I would suggest and advise getting it done much faster than that. I think a year's worth of payments on a property under construction would be suboptimal. And I guess I wanted to close the loop and make sure I was understanding properly. You said nothing structural, not adding a second floor, but even structural would include, I have an older home that's a 3-bedroom, 1-bath, or a 2-bedroom, 1-bath, and I want to add a master suite onto it, make it a nice 3 and 2. That's structural. I'm not allowed to do that, correct? Okay, perfect. Last one that I had is, how does the money work? So in this situation, we had about $50,000 went aside into an escrow impound account. How does my contractor get paid? What do I have to do? How does that work?
Okay, so that's a very great question because also with you choosing the contractors, etc., if they don't have the funds to get started, or if they don't have people like I got that'll do the work and get paid in the end, you're going to be SOL because the lender is not. Okay, I probably shouldn't have said that. You're going to be
It
screwed.
was code. It was coded
Use that
word. We
word.
will not let
Anyway,
Chris know that you used bad code.
basically your contractor has to have the funds to get the project started. So example, we went from quotes with plumbing with $30,000-$60,000, right? They were definitely buffering the quotes for sure because they didn't know her. There was no relationship established. My contractor went in and we were able to get everything done, and it's going to be $16,000. He started the project today, and well, they're starting today, and I don't have to pay them a dime until we're finished. However, I won't be paying them anything once we get approval, permits, green tag, etc. I'll submit the invoice over to the lender, have them pay them out. But your contractor definitely needs funds up front to be able to cover some costs in the event that they have a contractor that's not willing to, start the work without money up front. And typically it's about 50% of the project that the contractor is going to need for the work that they do.
Perfect. It's an important element to account for. And when you're on the front end of it, trying to put it together, getting your bids, it's a conversation that you want to have. Hey, are you comfortable with doing the work and getting reimbursed, knowing that this escrow impound account is over there to pay my contractor? And I'm not just saying, hey, trust me, guys, I promise I got it in my checking account. Some contractors will be okay with that. Some of them like, no, I need at least a deposit up front, at least a portion of my money. So with the VA loan, you can get in with no money out of pocket and no money in the bank. You want to make sure that you have the ability to work on the terms that your contractors want to work on. I guess, Joy, that's a question I did have for it. So on a normal VA loan, we obviously don't need reserves. Are you required to have any reserves on this? Any extra protection above and beyond? You can still spend every dime at closing. And
Yep. So that's why there's a 10% contingency. That's why the closing costs are higher. The only stipulations are on a manual underwrite, 45% DTI. You usually have to have reserves for it to even pass on a manual. And when we're talking about reserves, we're talking about principal, interest, taxes, insurance in the bank to cover your mortgage in case the inevitable horrible thing happens and you don't have any funds to pay your mortgage. At least you would have that in the bank to pay your mortgage. But no, unless it's required by the automated underwriting system, right? There's no stipulation that states you have to have any reserves in the bank. That is kind of taken care of in that 10% contingency that is part of your closing costs.
I keep saying I'm getting near the end of my questions, and then you guys talking, I've got more questions because you're saying good things here. Sam, let's say you're not the contractor and we're not using your subs. Are you comfortable with a 10% reserve? Is that enough? I mean, I've been on projects where, hey, we're close to budget 1 or 2% over. I've been on project, we've been over 25%. And again, that's from someone pretty experienced that I've done, 40 or so rehabs. It happens. Things come up that you are not aware of. I hear 10% for a VA buyer that's not putting any money down and doesn't have any reserves at closing. I get a little scared.
No, definitely. If in a situation where a contractor, they have to be comfortable with that 10%. There are some contractors would want a 20% contingency. I've had a builder do that to a veteran buyer about a year ago, where they wanted a 20% contingency because of how the market was with inflation on everything. The market has slowed down. The everything is moving and not normal, but at a better pace as far as items that we're getting. So that 10% that speak up and say, hey, I'm not comfortable with this. This is what I need. And then the lender would need to tell them they can do that or no, they can't.
Perfect. So unless you guys say something brilliant and insightful again that triggers another question, I have no more questions, but I did have something that I wanted to say, and what I've been telling a lot of clients over the last few years. We get people in 2020, 2021, 2022, when the market's really hot, saying, hey, I want a fixer. These prices are really high. And I would say, you have to understand market cycles. It's not the same everywhere, but it's more similar than different. And in California, where I am, when the market's hot, you're getting tiny discounts on a fixer property. Maybe you get a 10% discount, but it needs 15, 20% of work. So you're not really getting a deal. By the time you fix that thing up, you're paying more than the person that got the beautiful turnkey property and financed the whole thing that way. Well, now we're in a much more normal market. An example that I can give, I have some friends that are going through a divorce, and I went with her and looked at some houses with her and her daughters, and we walked into 2 houses. The girls, of course, loved this beautiful turnkey home. It was $100,000 more, and it's probably going to sell pretty darn close to what they're asking for because it's beautiful. And every buyer can look at it and go, that's pretty. I want that. We went to another property that, having flipped a bunch of properties, I can look at it and go, this property is 1,000 times better. It's ugly as all get out, and it needs, $70,000 worth of work, but it was $80,000 cheaper and probably going to go for $50,000 less than they were asking because it was so ugly and they didn't do some paint and carpet and clean up themselves. So we are in a market where a fixer makes a lot more sense than that hot market the last few years. So a tool like this can be very beneficial. We talk here every week. They don't have to be from the vetted VA community, but make sure you're using an expert realtor, an expert loan officer that knows the VA program, that can cover your back. So I think we have the best example of it here, a vetted realtor, a vetted loan officer, and a vetted realtor who happens to also be a contractor working on a unique program and putting someone. So with that, that's really all I have tonight. What did you guys want to close up with? Anything else you wanted to share about the program, tips, tricks, insights, advice before we let everyone go?
Yeah. So Sam helped us get extensions on this contract, but you really need to plan for a 45-day contract with possibly a 15-day extension, just because of the scope and magnitude of everything that's going on. Think about shortening the time, not getting that inspection. For instance, those plumbing issues, she had to have a couple different plumbers come out. 3, right? Was it 3? 3 different plumbers come out because of either the pricing, or they couldn't figure out what was wrong, or XYZ. And so on something like this, shortcuts could cost you tens of thousands of dollars later. This is not a time to get cheap on your inspections. It's not a time to shortcut the renovation budget. You need to understand what you're getting yourself into, determine that you want to do it and how much it's going to cost. So that takes time. And you really need a 45-day close with a possible 15-day extension on that.
I like that. Good information. Sam, last words of advice, words of wisdom.
Last words of advice. If you're going to do this, make sure the comps are there. Make sure your realtor understands ARVs. Make sure they have the people that can get in and out of the property. And definitely do your due diligence, as Joy said. And don't be afraid. Don't be afraid.
Perfect. I love that. So if you have more questions, we're done for tonight. But if you have more questions, go out, put them in the forums. We can get you answers there in the group. And if not, they'll track Sam and Joy down to get you those answers. Another resource we have there, if you're in the group and you search for VA Renovation Loan, there's another about hour-long call with the folks from Equity Prime walking through. It's not as fun. It's not as interesting. They don't have a great story like these two have. So, but there's a lot of good information and some more details on the program if you're interested and you want to learn about it. So thank you two for spending an hour with us, enlightening us with your wisdom and the experience that you guys just had on this. We really appreciate it. And thank you guys for showing up and watching and for being a member of Vetted VA. All right, everybody have a great week and we'll see you next Tuesday.
Thank y'all.
Bye. Thank you.